Today is Thursday, January the 16th. Volume continues to be right at the average relative volume. That shows strength, and the market is moving up. Today was a pretty big day, up 1% in the NASDAQ, pretty much 1% in the Dow, and 0.85% in the S&P 500. And we've got green in all the segments. Morgan Stanley had blowout earnings, which helped the financials. And of course, the NAFTA Part 2 or version 2 was signed. The USMC, I believe it's called. But of course, the impeachment trials of the president also started today as well. But that didn't spook the market. I think they pretty much understand that he's not going to be impeached. It's just going to be a drawn out, ugly affair. Advancers led decliners by 3-1. That is going to take, hopefully, that's going to take our, where's our, we've lost it. Let's find our McClellan indicator here. Let's go over here and let's load up the McClellan indicator. That's going to take our McClellan indicator a little bit higher. I actually thought from yesterday that we would have gotten a bit of a bump. That's the 15th, so we haven't seen the 16th yet. I thought we got a bit of a bump yesterday, but we didn't. Remember, the oscillator is the difference between two moving averages. And I guess that difference, even though there was a slight imbalance towards the advancers, and it's been about 10 points for the last 3 days, the oscillator itself hasn't changed. So money isn't moving into the market, isn't moving out of the market. It's the high frequency traders, I think, that are doing most of the buying and selling in the market right now. If you read this, I hope you read this, it's pretty interesting that VIX is not confirming higher prices. So take a look at that. But let's look at the charts now. The S&P up 27.52, and we continue to increase the distance between price and its nearest point on the cloud. And if you look back, what you always see is price coming back and testing the cloud, looking for buyers at the top of the cloud, right here, everywhere. Then we go down, we pierce the cloud, and we look for support at the 200. Then we come back and we keep testing the cloud. Whenever we get far away from the cloud, we come back down to the cloud, always. We did it here as well. And we went below the cloud, but we found the 200 for support. So the cloud and the 200 have been used for support for at least the last 3 years in this bull market. We are going to have to come down and test the cloud at some point. We don't historically see this going this long. Tomorrow I might spend a little bit more time on that. We'll go back and look at a little bit more history of the cloud and price. Apple up 1.2%, which was better than the market. So it's maintaining its position above the 8 EMA. Volume was pretty light. Caterpillar up 1.6%, but still in this channel, not moving from that channel. I still think that it has a rendezvous with the cloud, and the two are going to collide. And Caterpillar doesn't need to go down for that to happen. It just, if it continues in this direction, it's going to hit the cloud. And then we'll see either a movement upwards or we'll see failure through the cloud. We'll keep our eye on the Chiku span, which is running well above these candles, but as it moves here, it's going to have to move higher, quite a bit higher than the channel, to stay above these candles, all along here. So if we don't get that move up soon, the Chiku span is going to fall below the candles and is going to make the candles hit the cloud that much sooner and get us to the point where it's decision time for Caterpillar. Now, with the China deal having been signed yesterday, the NAFTA deal is going to do nothing for Caterpillar. The China deal being signed Should do something for Caterpillar, but that remains to be seen. There's still a lot of skeptics as to whether the Chinese can make their commitments in terms of purchases. Whirlpool, disappointing because it was really up for the last 2 days. Today we have a candle that was engulfed by yesterday. That's not necessarily a good sign, but we have less volume. So we are still bullish on Caterpillar. We're still looking for the Chiku span to come up and interact with the top of the cloud. 61.8% retrace back to this high is still the direction. And the next location we're going to is in the 158 area, where we've got two Fibonacci's, 150% and 178.6. Home Depot, which we don't have anymore, unfortunately, because we had 220 and 225s, and they would be nicely in the money. We sold them on it with $250 profit, but nonetheless, by now it would have been $500 or $600 profit. That's a shame. That's looking like a good stock. If we move up tomorrow and we break through the 50 with the Chiku span, I think I might get into it again. Keep an eye on that. Amazon, should move Amazon into stocks that we own because we do have a call spread there. Finished at the top end of its range, finished up almost $15. That was a nice move. Let's look at its volume. I still haven't added to the Amazon position. Volume is pretty pathetic, so we're going to have a good day of volume. I'm going to move this indicator down here. I can't. So let's just delete that one and let's put an indicator down here and say tomorrow we want to take a look at volume. That's what we're going to be looking for as our indicator for further direction. Shopify is just on fire. So Andy, thanks for pointing that out. I hope you took it. If you did, it wasn't with my encouragement. I was too wishy-washy on it, and I think you spotted a nice one there. It's going to collide with 458.33, but that's going to be a nice gain because we were watching it around 410. So anybody who got in there, doing quite nicely. It's a shame I didn't. And that's it for today. Where are we going? I guess we're still going higher. Although, we might channel a bit. We can look at our stochastics here. Our stochastics showing us way, way, way overbought. But we still need to get up to this 100% line, which is a 100% repeat of this bounce up from this point here. So let's take off the SMIs. And this move up from here would be repeated at 3336. We'd have this nice move up, which was the whole 2019 bullish wave, and then we had the 2019 bearish wave, and then we had 220. Sorry, we had, here we go. This was January 2019's bullish wave up, and then down at the beginning of the summer, then up, and then sort of came back to the 50% line. Anyways, we're going to 3336, and that might be the point where the market says, I need to see the cloud.